You open your phone and the headlines are just screaming at you. The American empire is in decline, the dollar is dead. It feels like the story's already been written, right? But what if those headlines are missing the real story? What if the system is actually designed so that the weaker the rest of the world gets, the stronger the United States becomes? That's what we're going to unpack. Because the truth is, it's hidden inside a trap so perfect, even America's biggest rivals have no choice but to play along.
It all starts right here. I want you to picture it. It's 1944. The world is literally on fire. And a group of men in suits, they get together in this quiet hotel in New Hampshire, and they basically build a cage and put the entire global economy inside it. And they made the US dollar the one and only key. We are all still living with the consequences of that decision today. So this is where you can really see the massive gap between what we think is happening and what's actually happening. On the left, yeah, that's the story we all hear. The G7 is shrinking, the BRICS nations are on the rise, and hey, that part's true. But look at the data on the right. It tells a much, much stranger story. The United States isn't syncing with the rest of the West. It's decoupling. It's breaking away from its own allies, pulling ahead while they kind of just stagnate.
And that leads us right into the first layer of this trap, what some are calling the Great Decoupling. This is where the U.S. economy basically started playing by a completely different set of rules than everybody else.
I mean, just look at this chart. Back in 2008, the U.S. and the Eurozone economies were, basically the same size. They were peers. But fast forward to today, the U.S. economy is nearly 50% larger. This is not a partnership of equals anymore. So what happened? Well, a big part of it is that while Europe was focusing on things like regulation, the U.S. was busy scaling up the tech giants that now, pretty much run the global economy.
Okay, so let's make this real. Imagine you are managing $1 billion for retirees in Tokyo. You need to grow that money. You look at your own market in Japan and you see stagnation, demographic decline. Then you look across the Pacific to the U.S. What do you see? You see AI monopolies, you see energy independence, the deepest, most liquid capital markets in the world. So where are you going to put that $1 billion? It's a no-brainer, right? It all flows to New York, and this creates this powerful capital vacuum. The more the rest of the developed world struggles, the more attractive U.S. assets become. But, that's just the stuff we can see, the surface-level economy. Now we're going to go down into the basement, into the pipes and wires of the global financial system, because that's where the real power is. To really get why it's so hard to build a replacement for the dollar, you have to understand this one rule. It's called the impossible trinity, and it's basically like a law of physics for economics. It says a country can have any two of these three things. 1, a stable currency. 2, free capital flow, meaning money can zip in and out easily. And 3, monetary sovereignty. That's just control over your own interest rates. You get to pick 2. You cannot have all 3. It's impossible.
And this table right here, it shows you the choices the two biggest players made. Look at the US. It chose free-flowing capital and control over its own policy. It gave up having a perfectly stable exchange rate. The result? You can move billions of dollars in and out of the US in a heartbeat. Now, look at China. It chose control. It wanted its own monetary policy and a managed exchange rate. Well, what's the price for that? It had to sacrifice free capital flow. And that creates what people call a hotel with no exit doors. Money can check in, sure, but it can't easily check out.
So let's just play that out for a second. Let's say you're Saudi Arabia, you sell a bunch of oil to China, and they pay you in yuan. Great, but now you want to go buy some fancy new planes from France, and Airbus wants to be paid in euros. To swap that big pile of yuan for euros, you slam right into China's capital controls. You can't just do it. You need permission from Beijing, and the market for that kind of trade is tiny and expensive. That right there is the liquidity trap.
And this is the bottom line. Despite all the talk, the dollar still fuels about 85% of all global trade finance. Why? Well, it's a network effect. The best way to think about it is like Microsoft Excel. Everybody complains about it, nobody loves it, but the entire business world runs on it, so you have to use it. The dollar isn't just money, it's the operating system for global commerce. And you can't just build a competing OS overnight when literally everyone is already trained on the original.
And here's where the logic gets really twisted and kind of paradoxical. After the 2008 financial crisis, new global banking rules, called Basel III, forced banks all over the world to hold huge amounts of ultra-safe assets, as a safety buffer. Well, when you look around for an asset class that's big enough and safe enough to fill that need, there's only one: U.S. government debt. Just think about what that actually means. The stability of the entire world's financial system now depends on the United States running massive deficits just to supply enough of this collateral. The world doesn't just put up with U.S. debt, it literally demands it.
Okay, so that's the digital world of finance. But what about the physical world? Let's move from the money to the map. Because honestly, geography is America's ultimate cheat code.
Just look at this side by side. I mean, China is an absolute giant, but it has these critical, glaring vulnerabilities. It has to import most of its food and almost all of its energy through one tiny little choke point, the Strait of Malacca, which just so happens to be patrolled by the U.S. Navy. In a conflict, the U.S. doesn't need to invade China, it just needs to park a couple of ships there. The U.S., on the other hand, we're a net energy exporter, with more than enough food for everyone.
Seriously, the U.S. is playing the game on easy mode. It's energy independent thanks to the shale revolution. It has the Mississippi River system, which gives it more navigable internal waterways than the rest of the entire world combined, which makes moving stuff around absurdly cheap. And of course, it can feed itself 10 times over. In a world where globalization goes into reverse, the U.S. is really the only major power that can, in theory, just pull up the drawbridge and be okay. So we have the money, and we have the map. Now for the final and maybe the most important layer of control, the technology that is going to define the rest of this century. The future, as we know, runs on advanced semiconductors. And it turns out the U.S. has a chokehold on every single critical step of that supply chain. The chips themselves, they're designed on American software. They're manufactured using a one-of-a-kind machine from the Netherlands that relies on crucial U.S. patents. And the whole thing is run by engineers who were, more often than not, educated in the United States. Let's just focus on that machine for a second. It's called an EUV lithography system, made by a Dutch company, ASML. This thing is arguably the most complex machine humanity has ever built, and it is the only machine on planet Earth that can make the advanced chips you need for AI. And because it contains American patents, the US government can legally tell ASML who they can and cannot sell it to. And they've already made it very clear, China is not on the list. Now, of course, China is fighting back, but you have to look at how they're doing it. They're using older machines, it's like a hammer, and they're basically hitting the silicon multiple times to try and create a modern chip. It kind of works, but it's incredibly expensive, it's slow, and the results are not great. Meanwhile, the US and its allies are using that EUV machine, the scalpel, to precisely carve out the next generation of chips.
So, okay, we've looked at the financial trap, the geographic fortress, and the tech chokehold. When you put all of these pieces together on the board, what's the final verdict on American power today?
This right here, this is the number that everyone points to as proof that America is about to collapse. $38 trillion in national debt. I mean, it's a number so big, it's meaningless. We now spend more just on the interest payments for this debt than we do on our entire defense budget. So why hasn't the whole system just imploded?
Well, welcome to the suicide vest theory. You know the old saying, if you owe the bank $100, that's your problem. But if you owe the bank $100 million, that's the bank's problem. Well, the U.S. owes the world $38 trillion. If China, for example, tried to dump all of its U.S. debt holdings, it would crash the price, which would instantly destroy its own national savings. At the same time, the move would cause their own currency to skyrocket, which would kill their export-based economy. They can't pull the pin without blowing themselves up too. And this really is the key to all of it. The dollar system isn't strong because it's flawless or perfect. It's strong because all the other alternatives are just worse. The euro is politically fragmented. The yuan comes with massive capital controls and, authoritarian risk. So when all the big money in the world looks for a safe place to hide, the dollar, with all its problems, is still the cleanest dirty shirt in the laundry basket. So you see how it all connects? It's a self-reinforcing black hole. It starts with the financial trap. The world needs dollars to trade, so it has no choice but to buy U.S. debt. That debt then funds the military trap, the U.S. military, which protects the global trade that keeps the whole system going. This leads right into the tech trap. If you're a nation that wants to grow, you need U.S. tech, which forces you to play by America's rules. And that, finally, leads to the brain trap. The smartest people from those countries often leave and move to the U.S. to build that very technology. It's a cycle. The weaker the rest of the world gets, the stronger the gravitational pull of the United States becomes.
Which brings us to this final pretty unsettling question. The data seems to suggest that no outside force, not China, not Russia, not even that mountain of debt, can actually break this trap. The only thing that can is America's own internal division. The only force strong enough to bring the system down is the system itself.
So the world can't quit the USA. But what happens if the USA decides to quit itself?